Good morning, good afternoon, and good evening, depending on where you may be in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Communications and Content Lead. And it's my pleasure to welcome you today to the Global Blockchain Business Council and Global Digital Finance's Global Leaders Series. This is a weekly global town hall we host with policymakers and business leaders to hear insights into their work, the state of blockchain and digital asset industry, and current global affairs. And today we have the pleasure to be joined by Caitlin Long, founder and CEO of Avanti Bank and Trust, and GBBC CEO and GDF Board Director Sandra Rowe for a conversation and live audience Q&A on Caitlin's journey from Wall Street to founding a digital asset bank and what that means for the future of finance. Just briefly before we begin, I'd like to introduce Caitlin. She is a 22-year Wall Street veteran who has been active in Bitcoin and blockchain since 2012. From 2018 to 2020, she led the charge to make her native state of Wyoming an oasis for blockchain companies in the US. There, she helped Wyoming enact 20 blockchain-enabling laws. From 2016 to 2018, she jointly spearheaded a blockchain project for delivering market index data to Vanguard as chair and president of Symbiont, an enterprise blockchain startup. And she previously ran Morgan Stanley's pension solutions business and held senior roles at Credit Suisse. She began her career at Salomon Brothers and is a graduate of Harvard Law School and the Kennedy School of Government and the University of Wyoming. To all of you who are joining us live, we welcome your questions at any point during today's conversation, so you can submit them in the Q&A box at the bottom of your Zoom screen. Thank you so much, Caitlin, for joining us. I'll hand things over to Sandra to begin.
Thank you. What an honor and a pleasure to be there with you and my Neckaroomy.
Hi, I am so delighted to spend the next bit of time with you, Caitlin. We've got a lot to talk about. Thank you, Sophia. We're going to dive right in. Caitlin, you know, most people who are in this space know who you are. They've applauded you for the hard work that you've actually, that you've accomplished in Wyoming. And frankly, you're a trailblazer across many different categories. But for those who may not be as familiar, because we do have a very global audience, do you mind just walking through your journey from banker to financial services to now where you are today, launching effectively a brand new type of bank? Please tell us a little bit about how you got here.
Sure, thank you. Like you, I was in senior roles on Wall Street at big US-based global financial services companies. And during the financial crisis, I started to question the mainstream explanation for it and realized that the subprime mortgage problem was the symptom, not the cause of the financial crisis. The cause was deeper. It was related to monetary policy and what had happened with the level of debt that's not backed by any real savings. And so through alternative economic schools, I did just a personal journey in 2008, looking at everything from modern monetary theory, which is all the rage now on the one end of the spectrum, to the Austrian School of Economics on the other end, and just did a lot of reading. And it was through Austrian School Economics channels that I started seeing Bitcoin in 2012. And I was at Morgan Stanley at the time. It was definitely not considered kosher to be a Bitcoiner, but as I started to thaw, I actually joined a internal forum, and the chief technology officer of Morgan Stanley found me. I was a managing director running a business amid a lot of folks who were, shall we say, of a different generation. And so he called me and said, come up to my office and let's talk. And he and I started working together. There was a small group of 5 of us. And I think you were at CME at that time, and that's when you and I first came across each other. We were looking at all the startups that were on a daily basis calling Morgan Stanley, and I did that on the side in addition to my day job, and then went full all in on blockchain in 2016, and have never looked back. So here we are.
Yeah, I have to say, once we all kind of realized what was going on in the blockchain crypto space, there really wasn't turning back. And I think you raised an excellent point about the financial crisis of '08 being kind of a watershed moment, at least for us folks who are sitting in banking. I felt the exact same way sitting at Morgan Stanley in London. You were sitting in New York, I was sitting in London, really shocked by how fragile our system seemed to be. And there's got to be a better way to design more resilient, sustainable systems. And
for sure.
we're fast forwarding to today. We'll talk about Wyoming. We're big fans of Wyoming and what you've done, but let's talk about first Avanti Bank and what you're doing there, because it is truly pioneering work. And I'd really like for the audience to understand from basics all the way through to your vision over the next few years. What is Avanti Bank and what are you looking to accomplish?
So we skipped over and we'll come back to all the Wyoming work, but one of the most important things that we did in Wyoming was create the first new type of bank charter in the United States in 40 years. And it was done in conjunction with the Wyoming Banking Division, worked with the SEC, worked with the CFTC, worked with the Fed. I won't say that they were partners, but they got a lot of feedback. So it's not like Wyoming, went rogue and did something on its own. They were actually actively engaging with other regulators that would have a view on what if we did something like this. And it's really interesting. I talked to a prominent person. I won't name him because it would out him, but he said, when I was looking at whether we get a payments charter in the United States, a special purpose bank charter, a lot of folks were thinking we should go through the national regulator. And I always thought in the back of my mind, a state should do it. And we independently had the same idea, and Wyoming just went and did it. So fast forward, I was working with there were about 150 different parties who inquired. And I was working with a number of them, trying to get them over the finish line. I was semi-retired and thinking I wasn't going to actually start one of these. I might be on the board of one or something like that. And just, working with just advancing the cause, the same kind of work you're doing with this industry. And what I learned was it is so hard to start a bank. The vast majority of people never even made it to the finish line. And in fact, actually, applications for this opened up in October 2019. And I knew Kraken was going to be the first. I'm a shareholder of Kraken, friends with the company, did a lot of work with them and others. And, I was watching them even take all this extra time. It's just hard to get a bank charter started. And we can talk about what's happening at the OCC in a minute. Those
Right.
OCC charters are not the same charter as what we're doing in Wyoming. The Wyoming charters enable direct access to the payment system. The level of work, of scrutiny, of capital, of technology that has to be in place for you to get access to the Federal Reserve payment system, it's just staggering. And it's very specialized. And this is why I ultimately saw how folks were struggling and decided, we can't have built this whole thing and only one came. And so I decided to go ahead and get started. And now what's happening is others are coming because they're realizing the power of the charter. We're not approved yet by the Federal Reserve. Both us and Kraken have applications in front of the Federal Reserve. But they've had our business plan since last spring. So we're coming up now, just short of a year of conversations. That is how long it takes if you want this premier access to the payment system. And that, I think, is going to be a watershed moment for crypto generally. The US is going to, I think, have two watershed moments on the regulatory front this year. One is the Federal Reserve is going to opine on the applications of Kraken and Avanti for direct access to the payment system, which is the core of the payment system. I think that's a watershed event, because if we do get approval, that means the Federal Reserve will have, for the first time, green lighted something in crypto. They've been hands off at this point, but they've never actually formally stepped forward and supported it. And I think a lot of the fear, uncertainty, and doubt, the so-called FUD over whether the government's going to ban Bitcoin, goes away at that point. So watch for that. And then the other piece is the Coinbase IPO, which I think is a watershed event for the SEC. Having been in the securities industry for so many years, we all know, I used to work in IPOs. We all know what it means when an IPO prospectus is deemed effective. It means the SEC has combed over every little disclosure in that prospectus and required an appropriate level of disclosure. And so the way the world is going to look at it, the SEC will never opine like this, but the way the world is going to receive that is that everything that Coinbase is doing is kosher with the SEC, including some of the coins that will be trading, that are trading on Coinbase that have a risk of being deemed a security. There will, of course, be just to be clear, we're not going to get a pronouncement from the SEC that nothing that's trading on Coinbase is a security, but we will, and that's how everybody's going to look at it. And of course, there will be a big disclosure in the IPO prospectus that things that are trading on Coinbase may be deemed securities. But again, the world's going to see right through it and think that you know, if the SEC were going to bring more Ripple type actions for unregistered securities offerings, they're probably going to happen before that IPO prospectus goes effective.
You raise a couple excellent points there, and we're going to have to try to unpack some of that. But let's go back to Wyoming, and particularly the differences that you've mentioned, which I think is still misconstrued by lots of folks around the bank. You know, if you get a bank trust charter in the state versus an OCC one, that not all banking licenses are the same, and they are not, they do not grant the same level of access and ability to provide certain services. So again, Caitlin, if you don't mind, can you walk through your journey with Wyoming on the legal side and how Wyoming got to where it got to, and then compare that to what we're seeing with the OCC very recently and also in the last year?
Sure. So we have, in Wyoming, we've passed now 20 different laws. The most important one is the most boring, which is that we clarified the legal status of digital assets under commercial law. Commercial law underlies every commercial transaction, whether you're buying a cup of coffee or buying an automobile or buying a home. It's all governed by basic commercial law. And in the United States, that's not federal law, that's state law. It's a little confusing for outsiders because securities law is federal law, but property law is state law. And so securities got carved out of property, but all other types of property are governed by state commercial law. Okay, so what we did, most importantly, we did a bunch of stuff, but most importantly, we clarified that virtual currencies get the same treatment under commercial law as money. There's a whole, I put out a tweet storm yesterday relating to that because the Tesla announcement of its purchase of Bitcoin, one of the things that I'm worried about is that Bitcoin is not clarified under the law of most countries in the world. Only a few have clarified that clarified it, and it needs to be treated the same as money. And here's why: because banks will lend against the inventory of a company. So when Tesla is selling a car for Bitcoin, technically the bank has what's called a first priority lien on that Bitcoin in the event that Tesla goes bankrupt. Any business that sells goods for Bitcoin, the bank actually has the first claim on that Bitcoin. And if they go bankrupt and the company happens to have sold it, the bank can come after you, the innocent purchaser. So what we've done in Wyoming for Wyoming residents is clarify that as long as you're an innocent purchaser and you're not colluding to defraud anyone, you actually do get to take free of all prior adverse claims. It's the way money works. This is why money is so liquid. You just, say, all right, this gets special status under the law. So that's the most boring thing we did, but I hope you realize now that's actually in many ways the most important thing we did, because we gave Bitcoin and other virtual currencies that special status. So then on top of that, and that was one of the most important building blocks before we set up the bank, right? Because the regulators in DC had told Wyoming, until we know what the legal status of this is, we won't know how to unwind a bankrupt financial institution that's dealing with these things. So, so you got to clarify the legal status first, and then you can make a financial institution. So why is this for the special purpose depository institution, or so-called SPDI, SPDI, Speedy Bank? I'll start calling it Speedy Bank. Why is it special? Why is it the first type of bank charter, new bank charter in the United States in 40 years? The answer is because we needed it to be able to deal with digital assets. So banks have special powers in the United States. If we step back, there's basically a four levels of licenses that you can get to deal with financial services in the United States. The easiest one is money transmitters. The next easiest one is trust companies. The next easiest one is banks, starts to get really hard. And of course, there's subcategories of all these. And then the most difficult one is a primary dealer, a money center bank. Those are the ones that actually, basically fund the US government by issuing treasuries. Okay, there are only a handful of those. Right. So going up that chain, it's very easy to get a money transmitter license. In some states, you only have to put up a $5,000 bond. Trust companies, definitely more difficult. That had been in the United States where crypto, it was the best license available. I think Paxos was the first company to get a trust company license in the United States. They did it in New York in 2015. It's been a while. But nobody had gotten a bank charter. Now, one of the things about the OCC charter is it's actually a trust company. They call it a trust bank, but it's really not a bank under the definition of what most people think as a bank, because it's not allowed to take deposits of US dollars. What does that mean? It can hold crypto or US dollars under trust, but it can't actually take deposits. And in order to get access to the payment system, you have to be able to take deposits of US dollars. So why is this important? Why does the crypto industry need access to the US dollar payment system? It is actually the most important fiat on and off ramp in the world. The US dollar is still where most of the value coming into crypto is coming from. There are other countries, of course, that are critical importance, but that bridge coming into crypto from the US dollar is really important. And one of the challenges that the industry has faced is that there are really only a small handful, really only 3 banks that will provide that on-off ramp.
Even that, yeah.
And interestingly, I'm part of a number of chat rooms you and I are part of as well for leaders in the industry. And we're starting to see that there's some concern that banks are cutting back again. There are accounts being closed again in the crypto industry. This is something that we all experienced in great detail, in depth in 2017. And it's why Wyoming created the special purpose bank charter. And what I learned at the time is that the FDIC in particular, the regulators in DC were pretty hostile to crypto at the time. They didn't shut it off. So to be clear, FinCEN, which is where all of the financial institutions have to register for that's the Financial Crimes Enforcement Network, which is part of the US Treasury Department. That one did not cut us off. They basically just said, you have to know your customer and you have to do anti-money laundering and sanctions analysis, of something called OFAC analysis. So at least they permitted the industry to continue to operate within the US financial system. But the other regulators, the FDIC and the OCC at the time were pretty hostile to it. And so we knew we had to structure a type of bank charter that was not under the jurisdiction of the FDIC because the FDIC was hostile to it. And so that's what we created. It is not an insured bank, and because it's not an insured bank charter, the bank is required to hold 100% reserves against customer deposits. We're not permitted to lend, and so we don't take the typical credit risk or interest rate risk of a normal bank. But we are a depository institution. Again, that's the critical thing. So the OCC Trust Banks, their capital requirement is 1/4 to 1/3 of the capital requirement of the Wyoming Speedy Banks. There's a gigantic difference between the two in capital requirement. And they are not, because they don't plug into the Fed directly, they are not required to do the things that a full bank charter, a full depository institution charter is required to do in terms of integration with the Fed. The Fed, of course, is very protective, rightfully so, of the payment system, and so you cannot use proprietary software to integrate in with the Federal Reserve, and there's just a lot that has to be done on that front as well. But the benefit that we gain is that bridge to US dollars. So the OCC Trust Banks still have to use a third-party bank to bridge to US dollars because they're not allowed to clear US dollars directly. But the Wyoming Speedy Banks, assuming that we do get our Fed access granted, we will be able to clear US dollars directly. That's a huge difference. And if you think in crypto about what that means, we can do atomic swaps of crypto assets versus the US dollar. That's the drum roll aha moment, light bulb moment.
Yeah.
Right now, a trust company or an OCC trust bank is going to be able to handle a crypto asset. And then one of these very small number of banks that handles US dollars is going to be able to handle the dollar. But those are two different legal entities. And so you can't get an atomic swap because you've got two different legal entities involved. They have to settle in sequence. Whereas if you can do it under the same roof, you can settle the US dollar directly with the Fed and settle a Bitcoin trade simultaneously, atomic swap, delivery versus payment, real-time gross settlement, whatever phrase you want to call it, that's what it is. You have to have direct access to the Fed in order to be able to do that. And you have to be able to custody crypto. And that's what the Wyoming Speedy Banks are designed to do.
So I'm going to underscore everything you've just said, Caitlin, because if anyone's been in this crypto space for any number of years, everyone knows that the access to and the on-ramp and off-ramp to fiat has been an absolute nightmare for almost every crypto company out there. It's actually caused probably top two problems in the crypto space.
And it still is a single point of failure risk.
Absolutely.
Because they're so concentrated. Yeah.
And for those out there, this is coming from a former foreign exchange markets person. The BIS triennial report comes out with the stats on the FX markets every year, every 3 years. Mm-hmm. And just to give you some statistics for those who think the dollar is going away anytime soon, this is not a plug for dollars, just giving you the facts of what is out there. Basically, over $6 trillion goes through the FX markets every single day, of which dollar is 86 or 87%. You have to go check the report for the exact percentage, but that percentage, by the way, of global market share of FX has gone up in dollar, not down. I actually anticipated that the number would have gone down from 2016, but the 2019 report actually has it going up. So yes, dollar matters. The on and off ramp absolutely matters. And what Caitlin has done in Wyoming and what the Speedy Banks are doing are absolutely solving for that. Let's hope we get more banks like Avanti, up and running, because that's what this market needs. It fixes a critical problem. So thank you for doing that, Caitlin. There are a lot of questions coming in, so I am going to actually go a little bit earlier to questions.
Sure. Fire away.
There's a ton of interest here. I think you've already illustrated the differences between the OCC bank charter and what, for example, Anchorage has received versus what one would receive in Wyoming. There are a couple Wyoming related questions that I think you are quite primed to address. There's a question here from Andrew asking that you've said that you said all residents, I don't know what he's referring to exactly, but business that stores keys in Wyoming still get protection?
So this gets back to this boring old base building block, the commercial law that's so esoteric and boring. Anyone who's been to law school probably just hated their uniform commercial code class because it's complicated. But let me try to simplify. So I mentioned that Bitcoin in Wyoming under Wyoming law it gets the same treatment as money. It gets this what's called super negotiability. If there's somebody else who has an adverse claim to it, like a lien, then and you are an innocent purchaser, you're not trying to defraud the person with the lien, then that lien is not deemed valid. There's also a 2-year lien cleansing provision, which matches the statute of frauds at a federal level, so that banks have to actually come in and what's called re-perfect their security interest in that Bitcoin if they want to have it, if they want to have an enforceable lien on it. And it's in Wyoming, they've got to come in within 2 years. So it gives the lenders, the legitimate lenders who have a legitimate claim. In that example I was telling you earlier, they've given basically, Tesla has a lending facility that gives the banks a legitimate claim over the inventory and all the proceeds therefrom, whether that proceeds come in cash or whether they come in Bitcoin or any other non-cash form. The bank has a legitimate claim to that. It's not the banksters being criminal. It's legit. It's a voluntary contract between Tesla and its banks, and it is enforceable. But what this does is it says for an outsider that that lien has to be, if it's subject to Wyoming law, it has to be re-upped every 2 years. So we've basically found a happy medium, basically. As long as your Bitcoin is in Wyoming, even if you're an outsider, that you can benefit from that. So how do you locate a digital asset anywhere is a bit of a mind bender. And this is probably the most novel thing that we did, because everything else we did, we just mapped crypto to existing law, which is not difficult to do. That's not radical stuff. This is the most important thing that's new. We defined how you locate something that's digital. And it's funny, the legal community was like, wait a minute, right? Most of the law is written for everything to be in paper form still. This is why if you're in the United States and you deposit a check by taking a picture to online banking, you actually have to have a picture, because that can be printed out and it's deemed to be in paper form, right? Okay, so it's crazy that we have to comply with these crazy laws and actually take a picture of the check. You can't scan it in any other way to get the data in the database. You actually have to have a picture of it. So these laws are really esoteric and complicated, and we figured out how to make Bitcoin backwards compatible with them. So the next question is, if you're not in Wyoming, how do you locate your digital assets in Wyoming? Because the easiest way to do it is do what I did and move here. There's no question that my digital assets, because I'm a resident of Wyoming, are located here, whether the private keys are here or not. But if you're from the outside and you want to actually come and locate your private keys here, you could get a safe deposit box here and put your Trezor or Ledger, for example, in a safe deposit box. Or literally, get somebody who's living here. If you've got your private keys in a different form, just make sure that it's provable that they're in the state. There are other ways you can structure it, and people have. You can get a Wyoming legal entity. Wyoming is actually number 2 behind Delaware within the United States in registration of limited liability companies. The limited liability company business entity form was invented in Wyoming in 1977. So there's a long history of LLC registrations here, a lot of estate planning attorneys and a lot of wealth advisors who are very well versed in Wyoming law. So go talk to an attorney and think about your estate plan, especially if you own a lot of Bitcoin. Think of and crypto assets. You've really got to figure out what happens if you get hit by a bus. And you may as well be working with somebody who knows Wyoming law, because Wyoming entities, trusts, LLCs, et cetera, probably should be part of your estate plan. But I will not give you legal advice because I can't. And each person's situation is different. You need to get your own attorney. And then, of course, the last way you can locate a digital asset in Wyoming is to have it deposited have it custodied, is a better word, at a Wyoming Speedy Bank. So this is one of the things that Kraken and Avanti will be offering to the marketplace. Avanti is going to be serving businesses only. Kraken, of course, serves consumers.
Right. Thank you for making that distinction. And, if we can expand upon this a bit as well, Wyoming General, with all these laws that have now been passed with obviously your expert leadership and guidance, have now created an ecosystem that is very unique. And, at the GBBC, we're working with the University of Wyoming, thanks to production, and we love working with Stephen Lupian, who's the executive director now of the Blockchain Center of Excellence. We see lots of green shoots of activity. I think that really, when you think about where in Wyoming would entrepreneurs want to gravitate, what advice do you have for outsiders who are looking at Wyoming?
Well, there are a couple of centers, but it's really anywhere, right? One of the things that I love about this industry is you don't need to be in a geographic center anymore. And what I just described to you about how you locate a digital asset in Wyoming, you don't actually have to physically be here. Somebody laid out, Miami's trying to give New York a run for its money to be the next financial capital of the world. If you look at the history of, financial capital of the US rather. If you look at the history of the US, Philadelphia was the original financial capital, and then New York stole that away from Philadelphia, and Miami's trying to steal it away from New York. The reason I brought that up is because we're trying to steal away Delaware's lead as a domicile. So in the new in the new world, the new digital world, you don't have to be located in New York or Miami. You can be, and you don't have to be domiciled in Delaware anymore. You can be but Wyoming is the more digital asset friendly place to be domiciled. Delaware started to go down that path, as you know, with the Delaware Blockchain Initiative in 2016, and then they stopped. Yeah, so Wyoming's a domicile. So, but if you move here, there are a couple of places where there are a concentration, and one of course is Jackson Hole. Jackson Hole is internationally renowned. It's a ski resort town, literally probably one of, if not the most beautiful places on earth, with the Tetons and Yellowstone National Park nearby. So Jackson Hole is definitely there. You know, Jackson Hole is fascinating because I think it is the wealthiest county in the United States by income. And I would say probably also by assets, because there's no income tax, no state income tax in Wyoming, and there's virtually no property tax, virtually no sales tax. So it's become a mecca for very wealthy people. And also there's something called a dynasty trust law here in Wyoming. You actually have to have a nexus to Wyoming. So for folks who want to have who want to leave their assets in their family for hundreds of years, you can do that with Wyoming Dynasty Trust, but you've got to have a nexus to Wyoming. So what did folks come in and do? They bought homes in Jackson Hole, and they're here, you know, for a fraction of the year, and they're Wyoming residents officially for tax purposes. So some of the wealthiest people in the United States are actually Wyoming residents, and it's Jackson Hole. But what that means is that real estate values are off the charts. They're New York, San Francisco level, pre-COVID type off the charts real estate values, and so it's not where most folks can come, and it's also not where you'd want to start a business that needed people on the ground. I thought long and hard when we moved back to Wyoming 18 months ago. I thought long and hard about going to Jackson because it's certainly a power center given. Right. You know, a lot of the household names of the wealthiest people that you know in the United States are actually Jackson Hole residents. And so it's, you know, if you need access to capital, it's a place where, you know, you get into the community and you start meeting people pretty fast who are super wealthy. But I ended up choosing to go to Cheyenne, which is the other big mecca, if you will, because we're only 90 minutes north of Denver. And it's funny, when I was living in the New York area, I always planned an hour and a half to get to JFK, whether I was living in the city or whether I was living in Connecticut. It always, you know, pretty much took an hour and a half to get to JFK. It was only 19 miles away, but it took an hour and a half. So the Denver airport's 90 miles away, but it takes 90 minutes. So it's you know, it's the same amount of time. It's just hard, you know, it's definitely more distance, but it's the same amount of time because you just don't have the traffic. So Cheyenne is the capital. It's also where the bank regulator is. So it made sense for me. It's also where the legislature is. It just made sense for me to be here to try to help get this whole initiative, including the Speedy Bank initiative, to be implemented. And I'm really happy we chose Cheyenne.
Great, that's fantastic. Which actually leads to a question around, there's a person here who said that they're a transaction banker and seeing a huge opportunity for corporate transaction banking. How would they get started in Wyoming? Any word of advice? Where should they start? I mean, Cheyenne, obviously, because of where the regulator is and where the legislature is, but who are the right people to speak to besides yourself? You're an awfully busy woman. So where would a listener get started?
Yeah, I literally get about 200 requests a day to be spoken to. So I apologize to everyone. There are just not enough minutes in a day. And at this point, it's I apologize. I oftentimes don't respond. So the best place to do is not to come to me because of that. The best place to go is to the Wyoming Division of Banking directly and start talking to them about what it's going to take. It's going to have taken us about 18 months. I was hoping it was going to be faster, but it takes a lot of time. A lot of capital. You've got to have a very experienced team and a very experienced board of directors in order to have a serious application that's going to be viewed seriously by the Federal Reserve. So, you know, a lot of folks who were inquiring early on were young teams of people who thought, I'll just go get a bank license, and then realized, oh boy. And by the way, I do not think it should be as hard as it is to get a bank license. There was a lot of bureaucracy in the process.
Yeah.
But it is hard to get a bank license because the Federal Reserve obviously has to defend payment system access. And so this is why you saw the OCC Trust Banks go through the process so fast. There is a much lower level of due diligence that the regulators have to do compared to a bank charter, a depository institution charter specifically.
That's right. Appreciate that distinction, and I think that should not be taken lightly. There are a number of questions here related to Aavit, the actual token. So I was hoping you could just talk a little bit about what is the function of Aavits, and I think it will answer a lot of the questions you're getting here around it.
Sure, I haven't disclosed a lot about it, but it is a token. We did disclose it's a US dollar token issued by a bank, so it's not a stable coin. A stable coin is not issued by a bank. Once you get that bank charter, you're in a different zip code, and you get access to some of these parts of the Uniform Commercial Code that only banks can get access to, that get special legal status. So that's I'll leave that aside. It's got a very different legal and regulatory characterization, and it's specifically designed for institutional users who care a lot about the accounting treatment. So one of the things that came out about Tesla and MicroStrategy and Square is that the accounting treatment for digital assets is pretty ugly.
Right.
It's the lower of cost or market. It's called indefinite intangible accounting treatment. Stable coins probably qualify for something called financial instrument accounting treatment, but that's not a cash equivalent. Whereas Aavit is designed to be a cash equivalent. What does that mean? Businesses really do care. Most businesses won't have their corporate cash invested in anything that's not a cash equivalent,
Right.
Cash or cash equivalent, because their banks do their liquidity and credit and leverage ratio analyses based upon how much cash they have. So the presentation on the balance sheet under GAAP or IFRS accounting standards is really critical. And if crypto assets are not, if they don't qualify for cash equivalent treatment, then inherently a lot of businesses are just not going to use them. Trading businesses will, they're in a different category, but we're looking at, mainstream operating businesses, non-financial businesses. That's where the bulk of the users of the financial system are. They're not other financial institutions, they're actually operating businesses. That's where, as Sandra, as you know, that's where most of the foreign exchange flows are. It's actually corporations moving money in real payments, not just speculation going back and forth. And so you have to actually put your hat on of, if I were a corporate treasurer, and of course I worked with corporate treasurers for a long time, if I were a corporate treasurer, what would I want if I were going to use a crypto asset as a payment system? I'd want it to be an actual US dollar issued by a bank, and I'd want it to have certain legal, accounting, and tax characteristics that made it look just like any other bank product. And so that's what we've accomplished with Aavit. Knock on wood, we're approved to issue it. But we're waiting for our Federal Reserve approval, and we're waiting for our final certificate of authority to operate from Wyoming.
Right. Perfect. Thank you so much for that. I think that's a critical point. So let's talk about corporate treasury, because you had a tweet, I think it was even yesterday, around Tesla's 1.5 billion conversion into Bitcoin, which is what you said, 7.7% of their cash on balance. So that, it's still significant. I would say 7.7%. It's still a significant chunk of your cash outlay or reserves. What does that mean for them that they've gone into Bitcoin? How will they be able to classify it right now? Because can they really, from an accounting treatment standpoint, have it as a cash equivalent? It's not defined as such.
No, it's not. And actually, I'm not an accountant, can't give accounting advice, but in my tweet storm, I actually lifted the disclosure from Tesla's 10K, where they lay out, and this was laid out at the MicroStrategy conference last week. The accounting for direct investments in Bitcoin is asymmetrical. You only ever mark it down, you never mark it up until you sell it. And that's pretty ugly because it's subject to what's called impairment testing. And so under impairment testing, again, I'm not an accountant, but the definition says if there's an other than temporary impairment, you actually have to write the value down, and then you never get to write it back up. So in a bear market, it's very difficult under US GAAP, and I believe IFRS has a similar approach, that it's called an indefinite intangible. It's the same way that gold is accounted for. And so it's asymmetric. So we've got to fix this. And now that we've got companies coming into Bitcoin, I think one of the reasons that Square only put 2% of its cash into Bitcoin, in spite of Jack Dorsey being so committed to Bitcoin, with Cash App and in his public communications, I think they did the analysis of what's the worst case scenario of a surprise impairment charge that we may have to write down. How much would our shareholders tolerate? And it's weird because if they bought a Bitcoin ETF or a Bitcoin fund, they'd be able to mark it up and down. But if they buy Bitcoin, they can only mark it down until they sell it. So it's we got to fix this. This is one of the reasons why we haven't seen more mainstream adoption of Bitcoin. But you also asked a question about Tesla. One of the interesting things that most folks, because we were so excited about Bitcoin, didn't note is that they actually the board authorized them to invest a portion of their corporate cash in gold as well. So I noted that because I've talked to corporate treasurers over the years who were worried about the stability of the dollar, worried about the stability of the financial system, and thinking about how should they diversify their corporate treasury. And in a handful of cases, MicroStrategy is unique. You generally don't see corporates take that kind of volatility exposure and move so much out of that cash line item on their balance sheet to an investment line item, because again, the banks don't look at investments as liquid cash. So it does, if you are a company that has a lot of loans on the books like Tesla, you really do have to be careful about taking so much out of that liquidity line item, the cash and cash equivalent line item. And Bitcoin does not qualify as cash and cash equivalent. So again, like I think we will have crypto that does, stable coins do not, Bitcoin doesn't, but stay tuned because we're working on that.
I agree with you. I think there's a number of areas right now that just still need to be fixed. And I was just talking to someone the other day about derivatives on the crypto space, and frankly, how very little has actually been done since I was at CME. And the futures got launched at the end of 17 now, just yesterday. The Ether futures got launched, which frankly, I think a year longer than I would have expected Ether futures to be able to go out the door. But the ETFs, I mean, that's a major one. And the accounting treatment of all of these instruments do matter. And the fact that there's still ambiguity, love your cup, love your mug. I have the same one.
Yeah, I love yours as well. Yeah, this is Bruce Fenton's son. Yeah.
Yes, exactly. Shout out to Bruce.
Yes.
And his son. I have to say that we still have a lot of just basic classification from an accounting standpoint, let alone legal. We got also accounting treatment work that needs to be done. And again,
and tax.
It's going to take some time, but these are all elements that prevent mainstream corporate treasurers and more companies getting into even allocating a tiny percentage of their reserves into crypto.
Absolutely. Well, that's in part the role of GBBC, right? Because you're advocating and educating, and it really doesn't make sense for Bitcoin to be treated, I think, any differently than a dollar. I realize that a lot of folks would disagree. And again, the state of Wyoming already jumped out ahead and said, you know what, from a commercial law perspective, we're treating it the same. It's never going to be legal tender in the United States. I don't think it'll ever go that far. But that doesn't mean that it has to have this punitive accounting, which is asymmetrical and doesn't make sense. Why have you put it in a fund structure like Grayscale? Can you mark it up and down? But if you buy it directly, you can't mark it up and down. You can only mark it down. Those kinds of things just don't make sense. And we just have to address them. But it's going to take time. And also, I think this lien issue that I identified yesterday with Tesla, if I were the banks, I wouldn't want them to hold that Bitcoin. I'd want them to liquidate it as quickly as possible, because the banks don't ever want to, in the event of a bankruptcy, have to go after Bitcoiners. It's easier for them to go after someone who has cash.
Yeah.
So, but this is something I've got to get a shout out to Trace Mayer, one of the early OGs in this industry, who has been, he identified this. He and I were spitballing, what are the attack vectors on Bitcoin when it's $25,000, when it's $100,000, when it's $1 million. The attack vectors on Bitcoin are going to be very different depending upon those levels. And if you think about it, we started working on this in 2018, right? Bitcoin was a lot lower in price back then.
Yeah.
And so yeah, he identified this lien mess as one that we needed to get fixed. So and specifically, one of the things that the banks will do, remember I said earlier, the lawyers always want things in paper form. The way that you so-called perfect a security interest, in other words, file an enforceable lien that a judge is going to recognize in Bitcoin, is to file a piece of paper with the Secretary of State. In most states, at least in Delaware, it's electronic, but it's not connected to a blockchain. It's not easily searchable. You can't, as an innocent purchaser, go and try to search to see if there was a prior lien on the Bitcoin you were buying. So that's why I think the banks probably won't want the Teslas of the world, and any other company, Overstock.com, any other company that's selling goods for Bitcoin. They're not going to want them if they have a loan covering the inventory that gives the bank a lien. They're not going to want them to hold that Bitcoin, because it just makes it more difficult for the banks, in the event of a bankruptcy, to go after those proceeds from the sale of the goods, which actually belong to the bank.
Yeah, no, you raise an excellent point there, and I think we
gotta get that fixed.
Very few people have really thought about the interplay of crypto into things like collateral and liens and the treatment of such, and how that works in the traditional financial services system. Let's switch gears on something that you mentioned, a while back in our conversation, but Coinbase. Coinbase is going direct listing on NASDAQ soon, and hotly anticipated. What is your view on generally these platforms? I mean, Coinbase being the biggest, but you've got Kraken, you've got a whole bunch of others. You're starting to see some M&A. Do you see the need for these platforms to actually be regulated like the traditional stock exchanges, or do you see something different?
Well, I think we're going to get an answer to that this year, right, from the SEC, right? I happen to think, I don't know anything. I've never met Brian Armstrong. Actually, it's funny, I don't know that many people directly at Coinbase. And I've never met Brad Garlinghouse. So just to set the stage, I'm not part of either the Ripple or Coinbase. Just don't know the folks. But one of the interesting things is, I think that just reading the tea leaves as an outsider, I think that the SEC's lawsuit against Ripple was actually precipitated by the Coinbase IPO, because they knew XRP was trading on Coinbase, and Coinbase filed that S1. The SEC knows that they know what I shared earlier, that even though the SEC is never going to opine officially on whether something is or is not a security unless they bring an enforcement action, the world is going to view that the Coinbase IPO prospectus going effective is effectively the SEC blessing it with holy water. That's the way the world's going to view it, whether the SEC wants it or not. If the SEC doesn't want us to think that way, they're going to have to say so. And the only way they say so is they bring an enforcement action and say that this asset was a security, and it needed to be a registered security offering, and it needs to only trade on a broker-dealer. So it's interesting, because you asked about the other platforms. A number of exchanges have broker-dealer subsidiaries, and the SEC has been very slow. I just did a podcast on Real Vision with Commissioner Hester Peirce. She's been one of the big proponents of this technology in securities. And Gary Gensler, who you and I both know, is likely to be confirmed as the SEC chairman under the Biden administration. He's been formally nominated, and he's been teaching blockchain and cryptocurrencies at MIT. So he definitely, I mean, he's somebody also who's got one foot in both worlds, like you and I do. And I'm optimistic. I think he will actually be green lighting more broker dealers to be involved with digital assets. But there are a lot of thorny issues. How do you define where a digital asset is located? We had this conversation earlier, you know? And so a custodian of securities has to meet the SEC's requirements on something called good control location. What's a good control location for a digital asset? How do you know that the person who has the private key is the exclusive person who has exclusive owner of the private key, and that nobody else has a copy? You can't prove a negative. So these are the thorny issues that the SEC will have to deal with, and I think they will have to loosen those requirements a little bit. They are very focused on exclusive control of the private key, and that's just really hard to prove. And so, you know, there's a lot that Wyoming put into its digital asset custody rules that reflect conversations back and forth with the SEC, including, by the way, that the SEC has historically not viewed trust companies as a qualified custodian because, and historically, one of the issues the SEC has had with trust companies is that they all go through the U.S. bankruptcy code in the event they fail. Whereas, as you know, broker dealers and banks have special receivership rules, and the receiver is the financial services regulator. Whereas for a trust company, the receiver is a U.S. bankruptcy judge. What does that mean? U.S. bankruptcy judges can break contracts. So if you have a contract to segregate your assets, a U.S. bankruptcy judge in a trust company bankruptcy can break that contract at precisely the moment when you really needed it to be enforced. Right. And that's one of the reasons why, if you look at the definition of bank under the Exchange Act, it's word for word the same as the definition of bank under the custody rule, the 1940 Act, except for one thing is missing, and that is trust company. So because the SEC does not like trust companies as custodians, and like I said earlier, that was the best thing available. Well, now bank charters are available, including the National Trust Bank Charter. And ultimately, I think everybody in the industry is gonna need to flip into a bank charter. Will everybody in the industry also need a broker-dealer charter? Right now, it's not available, right? We've broken through so that bank charters are available. That's now where everybody in the industry is gonna need to go, whether they're a depository institution with Fed access or whether they're just a trust company or not. Each individual business is going to be making those decisions for themselves based on what's best for their business. If they're just in the custody business, they don't need to go through the extra hassle to get access to the payment system as a depository institution. So that National Trust Bank charter might actually be optimal. That may be where lots of folks in the industry land. But interestingly, both Kraken and Avanti publicly said after the OCC Trust Bank charter became available at the end of last year that we were sticking with our depository institution path.
Got it. No, it's absolutely critical that we keep our eyes on all of these. I think the trends are going to be shifting as quickly as some of the news flow that we're seeing these days. I have to say, you had the excellent quote while we were talking before we aired about the bull market. What was that quote?
Oh, I was quoting Jake Chernivsky, who's a prominent attorney in this industry, and he said, "I slept better during bear markets." Yep.
Every morning, it's just something else. Yeah, no, it's just insanity what's going on these days. But I also feel like it's a culmination of years and years of built up work that a lot of people in the industry have been chipping away in different pieces, and frankly, culminating to what we're, I guess, seeing fast and furious now. And 2020, I think, will be no different. In our last few minutes with you, Caitlin, I would love to give you the floor to just talk about your message for the crypto and traditional industry. I think there are people who come from both walks of life, people who have one foot in each. What is your advice and what is your thoughts for 2021 as we continue to solve for problems and build?
For folks working in the crypto industry, wherever you are, roll up sleeves and try to get these legal changes done in your state. There are now a number of states that are, a number of states have copied many of Wyoming's laws. So far, nobody's copied that commercial law. That's the most important one. And there are 3 states that are working on it, and they're getting pushback from national groups who don't want more states to jump out ahead. And I think, to be honest, some of those national groups are influenced by traditional players who don't want crypto assets to be given the same legal treatment as money and cash and other traditional assets. But we got to get those legal changes through. So South Dakota, Nebraska, and Kentucky are the 3 states, but Mayor Suarez in Miami is really working hard to get it done in Florida. The governor's office in Texas has contacted me, and they're looking pretty hard at passing that commercial law. Get that commercial law passed in your home state. That's really important. That takes that lien mess issue off the table for more states, and we need that. And for folks in the traditional industry, just dive in. I mean, Sandra and I didn't learn from anybody else. We literally took time. And when we were getting going, Andreas Antonopoulos had a few videos out, but there weren't, the Bitcoin standard hadn't been written yet. There weren't classes that you could take on MOOCs to learn Bitcoin. There's no substitute for just diving in. You're going to learn a lot faster than we did because there's just a lot more materials available. I like Jameson Lopp's website for his basic materials on Bitcoin. I definitely encourage the Bitcoin Standard. Nick Bhatia has a new book out called Layered Money, which is fantastic for those who work in the traditional financial system to understand how Bitcoin fits in. And then also MicroStrategy has a website. If you scroll down on their Bitcoin resources, some of the things that Michael Saylor himself used when he was learning Bitcoin are down at the bottom of that website. I would encourage you to use all those resources, and there's just no substitute for time.
Well, thank you so much, Caitlin. You are a tremendously busy woman, and we really appreciate you dedicating as much time as you have for this conversation. So great to catch up with you. And we will be following, watching, supporting you every step of the way. Follow Caitlin on Twitter, on LinkedIn, wherever you are on social media. She has a lot of great materials, and frankly, has some of the best commentary out there related to banking and crypto. Thanks very much, Caitlin.
Oh, thank you, Sandra. Back at you. You've been a big supporter of what we've been doing in Wyoming, and you're doing critical work in helping to fix some of these legal and regulatory and accounting issues. So Godspeed. I want to support you as much as possible as well. Thanks, everybody.
Bye.
Hi, everyone. Thanks so much for tuning in. We'll share a recording of this with you all. And on March 16th, our next episode is with Hester Pierce. Thanks again, Caitlin, for joining us. And thank you, Sandra.
Terrific. Thank you, ladies.